Good morning, everyone. Welcome to our Friday morning trading session. Hang on a second here while I get my screen sharing up and running. Just a quick note, we're having a little bit of a windstorm blowing through here, through the Pacific Northwest. So if you hear some trees falling down in the background, and if I suddenly disappear, that means I've lost power. We've got some old cottonwoods growing not too far from us, and cottonwoods have a tendency to dry out and become very brittle as they get older. All right, so we just saw the markets open up. This here, of course, is the NASDAQ. Yesterday, a very subdued session. We saw that decline and then a little bit of a rally toward the lunch hour, and then really nothing for the rest of the day. The rest of the day just totally flat and kind of scrunched into these 8 or 10 bars that you see right here. So the market ended up closing around 48.70-ish, and that's pretty much where we opened the day. So here we are hovering around 48.73, 74. Market saw a little bit of a rally up, quick little move down. That would be in response to the jobs report that came out pre-market. So we'll just wait a little while, wait for one of our high probability signals to develop. And then we'll look at possibly taking a trade. Almost looks as though the eagle's starting to fold over on itself here. We did get a trend change signal here on the Falcon. Oh dear. Come back here a little bit. And we're getting a first micro-macro cross in the hawk. So let me get a couple of these trades on. Okay, we don't quite have the... I'm going to let my hawk trade run out a little bit. Seeing how this is the first signal of the day, sometimes we get a rather pronounced move. And here on the Raptor, I wanted to try to get into this cloud crossover signal. We may get a second chance at this one. The cloud crossover signal on your Raptor occurs when the clouds cross over, then the market retreats into the cloud, and the cloud pushes the market out, produces a signal. In this case, it produced a buy signal. Now we're getting a cloud crossover going the other direction. So we've got the market moving down. There we go. Here's the market now moving into the trading band, into that cloud, and we would look for the cloud to push the market out. All right, so here they're coming with a signal already. We've got the warning dot. Oop, had the warning dot. I'm really struggling here for some directionality these last few days. Very congested, very sideways type market. Okay, so here comes the hawk now again. Oh, I'm going to stay here with the raptor because I'm going to get that signal. Here's the cloud crossover. The market's into the cloud. We're looking now for the cloud to push it out and for that signal to develop. Here they come. Ooh, tough bar. Very, very balanced. You can see the Geiger counter here pulling to the buy side and kind of spending a little bit of time there. We'll see whether or not the sellers absorb that or whether the counter. Yeah, the dial's trying to pull here to the short side. There we go. It's sticking. It's holding. It's holding. Huh. All right. Well, still looking for that reaction. Well, I wonder if I should have left my break-even trigger in play here on the hawk, or even my profit objective. We did hit the profit target. Hmm. Hmm. Okay, now we're trying to produce a first micro-macro cross signal higher. Looking for this one to get down into yellow bars. And I suppose we could start to roll our stops in a little bit. All right, well, there they just tripped that first micro-macro cross higher. It's a, you know what, it's a sideways market. I suppose it's like one of these 50-50 type trades where it's a high probability signal to be sure. To take that one, you're doing the opposite of what we're doing here. You'd need to risk it all the way below there, because that's the point that you're going to know for certain that you're wrong about the trade. We did see a rather bearish move to start. So the market opened here, a little bit of a bearish move. So kind of favoring the short side for the moment and also nursing our short trade, of course. Come on. So 48.66 being a little bit of a stumbling block. Once we get back through here, we could see a little bit of follow through. Okay, I'm going to hold my stops. All right, come on. Sellers, let's go. Right, here we go. There's 63, 62, 3/4. There we go. Okay, we've broken the low. I'm going to force the trade to break even now. Just making a couple notes in my journal. No! Come on, you stinkers. What happened to all that selling? There we go. Come on. I'm tempted to go now to the bar high-low strategy, which is even more aggressive. Keep the stops tighter still. This whole 48.58 area is where the market took a pretty good rally yesterday. That's kind of where they picked it up just around the lunch hour. There we go. All right, I'm going to the bar high-low now. I don't feel like giving this market too much wiggle room, just out of curiosity. Yeah, parabolics a little bit further back. Let's see if the parabolics would have held me. in this trade a little longer. So the parabolic's being right back here. And if it goes through 48.60, there we go. So we would have been stopped on the parabolic regardless. Picked up another point and a half with a slightly more aggressive strategy. You know, it just gets to be a point where you just don't want to give too much back. So $160 on a single contract, that's a half decent move. Nothing wrong with that. Nice little high probability signal, even though we did have to sweat the trade for a little while. It does appear as though we are in a little bit of a downtrend this morning. Look at that, keep going. That's crazy. So I was looking here also at that Raptor trade. I wanted to take advantage of the cloud crossover. So that would have had a very nice follow through as well. Now, when the cloud crossover occurs, this one here is very neat and tidy. The clouds cross over, the market goes into the cloud spits the market out, no real breach. Here, however, things got a little bit messy. It is still a cloud crossover. The clouds cross over, the market retreats into the cloud, the market pushes, or the cloud pushes the market out, produces a signal. That is your cloud crossover signal. So even though it's not as neat and tidy looking as this one is back here, this is still the same thing. And it's something to bear in mind when you're trading, because you can't put too fine a point on things. The cloud's crossed over, the market's retreating into the cloud. You expect the market to push, the cloud to push the market out. So that's what you need to be on the lookout for. Likewise with the first micro-macro cross signal that we took. I decided to try to run it out just because it was the first signal of the day. Otherwise, you take your profit and you look for your next opportunity. Let's say you took, did any of these engage? No. Oh, I guess if you took it right on the hash mark, you would have been brought in on this macro pullback signal right here. And then we had the red bar buy fail, and then the market head lower again. Now, I know somebody's going to write me and say, Eric, why did this first micro-macro cross not work out? Well, you need to always take into consideration the left side of the chart. I think one of the advantages that day traders have over end of day traders or traders who are trading static charts is that you can see how this market unfolds. So you can see that, oh right, the market opened here and just boom, boom, two big moves lower in the matter of 4 or 5 minutes. The market has a definite downward flavor to it, if you will. Then we get a little bit of an uptick. And yes, this is a first micro-macro cross. Yes, it is a high probability signal. Unfortunately, it's not 100%. It still runs about 80% correct. But you're looking at a counter trend signal. When I saw the market unfold like this, right away I'm thinking, oh, the market's a little bit bearish. So if you're going to try counter trend, don't go in for the full amount. Don't go in necessarily for the 2%. Dial it down a little bit. The market brings you in and then promptly reverses, and then gives you this little opportunity here, your red bar buy. Okay, now it's your cue to start rolling your stops. After all, if the buyers don't recover the market at this point, it's very likely going to head lower. And so you ended up getting stopped out for perhaps $150, give or take. And then, of course, the market gives you another first micro-macro cross signal, this time lower. The other thing that I like to do as well is if the market seems to be paying off in one direction, I'll stay with that direction. So what I mean by that is we had this first micro-macro cross signal right here. It got down to its profit target. So the market seems to be paying to the short side. So I'll be paying a little bit more attention to short signals than long signals. So when we get the macro pullback signal, I'll be looking to sell. When we get the red bar buy signal, I'll be looking for the failure and a chance to sell. When we get the first micro-macro cross, I'll be looking to sell. Because the market seems to be paying off to the short side. Now, had this very first, here, let me clean this up a little bit. Had this first micro-macro cross signal failed, and by failed I mean not reach its profit objective. So let's say it filled the order and then promptly turned around and started heading the other way, and then we get a first micro-macro cross higher, I would be thinking at that point, the sellers are not in control today. So I'm going to be looking for buying opportunities. So I'm going to be looking at a chance to buy because the sellers could not capitalize on a high probability signal. All right, so that's something to keep in mind. But right now, or at least for the first few minutes out of the day, it looked as though, or it's looking as though, the sellers are in control. Now we're getting a little bit of a retracement here, which, we might anticipate. After all, it was a pretty strong move lower. All right, and here they come again. Maybe. Crude oil definitely looking a little bit on the bullish side as well. chart here in just a second. Well, a little bit more bullish. Crude oil kind of doing the same thing as what the NQ was doing yesterday, kind of flip-flopping here back and forth. This is on the Eagle, of course. I suppose you could interpret this as a rule of three signal. Yeah, Andrew says, crude's trying to kill traders, best to leave it alone. Yeah, there's a lot of truth to that. Crude oil, of course, on a extreme rally for like the last 4 or 5 days. It hasn't looked back. You've got to think there's got to be some profit taking going on there soon. Okay, now we're just kind of flip-flopping a little bit. Soybeans pushing higher. Here are soybeans on the Falcon. And right out of the open, we got a trend change slash late filter entry signal. And just great follow through so far. Soybeans, another relatively conflicted market of late. But you can see we hit our high probability target there without too much difficulty. And we've since produced another late filter entry signal. Now, the thing with the late filter entry signals, like all our signals, we don't want to see them print over and over and over again. They're high probability signals, and the first occurrence, of course, is going to be very high probability. Second one should follow through, but if we get a third or a fourth, I would be very leery. It's not to say I wouldn't take it, but I'm definitely going to take steps to protect myself. Maybe dial down the risk, maybe look at a second push on the entry. Stuff like that. All right, here on the Hawk now, it looks like we're going to try to get a little bit of a rally. We've got a first micro-macro cross and a green bar sell, more or less in the same neighborhood. Oh, you're going to run away on me now, you stinker, just as I decide to point you out. The first micro-macro cross, of course, technically occurring down here. You may choose to, because we've got the green bar sell, you may choose to put your entry above the high of the green bar sell as well. You know, it's a couple of extra ticks, but I think it would help keep you on the right side of this trade just by making the market take out that high. And we would currently be working this first micro-macro cross higher. Of course, it's always a little bit of a trade-off, because if you do take the signal on the hash mark, we'd be at our profit objective already. But that's okay. We got lots of time. We can afford to be picky. Wow, crude oil. Oh, they finally ticked. I was going to have to check my data feed there and make sure that it was still on. They were really taking their time there. And we're coming into the hard edge on the Eagle and the Raptor. And we're into our median line here on our support and resistance suite. So we got a couple things here. Okay, we're getting the hard edge bounce. This here on the Raptor, a double pullback signal if you choose. And maybe we'll try to run this one out as well. Got a chance for a second push on this signal also. So with the double pullback, it's a continuation signal. So we've got the market in a downtrend, it pulls into the band pushes it out once, goes into the band again, comes out a second time. That's your double pullback signal. As long as we don't breach this high, we should still be okay. All right, I'll put that on the shelf for now. This Geiger counter pulling hard over to the buy side. We could be in for a little bit more of a rally. producing now another buy signal here against the band. I'm going to cancel this signal. If the market bounces off the hard edge again, we should produce another with trend signal. The way I'm seeing this right now is, to me, it looks like a rather extended bear flag. The market's kind of creeping a little bit higher. In this instance, we can probably expect the market to break down, go below the lows. That's what I'm thinking. But first we have to get the sellers to show up again. Alright, so regardless of whether you took your first micro-macro cross off of the first micro-macro cross hash mark or on a failure of the green bar sell signal, we would be at our profit objective. Hooray! I wonder if the sellers have just kind of walked away from the market now. The buyers just kind of nibbling away, pushing the market a little bit higher, tick by tick. Oh, just watching, waiting here. The Raptor starting to cross over again, now to the upside on the clouds. And I wonder for a second, oh, we've got a trend change signal here, and we're working a late filter entry signal. I wonder if that one's gotten to its profit objective yet. Oh, it did too. I'm expecting a reaction to the hard edge. That's why I was a little reluctant taking some of those buy signals. Well, another pretty quiet morning. I don't think crude oil has hardly moved 3 ticks in the last 10 minutes. Soybeans also grinding to a halt after their nice little rally. And here we are with the NASDAQ. Also stuck. Okay, here's our reaction now to the hard edge. On the Eagle, working a green bar sell. We're currently against the ATR. I think I would allow the ATR to flip over. What we're looking for here is a retest of the low, a test of the extreme. Nope, not yet. The hawk, obviously bullish already. The Raptor working to get bullish, but not bullish yet. All right, here comes that green bar sell signal. Now, if you wanted to be more aggressive on it, see the thing about entering the trade early is you get a chance to manage your trade a little bit more aggressively in case the market fails to head any lower. Right? Even though we're against the ATR, by waiting for the ATR to flip over, we would sacrifice another bar. Our entry would be down here, and now all of a sudden we have a little less room to maneuver, a little less room to get serious with our stops. This is really going to be the last chance for the bears to recover this market. In fact, I'm only putting my stop up here to start. I could just take a single contract because my intention is to only risk it that far. Ideally, stops would go above these highs. A couple of swings back, that would be the best place for them. Or at the very least above this high. We'll see what they're able to do here, though, if anything. If we actually get that signal to print, or if the market's going to wander higher still. You can see the trade forecaster telling us that we're in scalp mode for about another 10 minutes, and boy, if that hasn't been the case. After which, we should be moving into trend mode. So hopefully we'll see a little bit more follow through. If in fact the market does produce a signal for us here. All right, we're getting warmer. Getting warmer. Pretty serious support here at 46.64.65. Oh, good to know. Andrew says that's the value point of control where we're at right now. Well, that would make sense. For those of you unfamiliar with that term, Andrew's watching Market Profile, and as part of that, they have a price called the point of control, or some people call it price of control. And that is technically the most popular price on the day. That's where most trading activity is taking place. All right, so our signal has since disappeared, so we're going to cancel that. All right. Look for perhaps a little bit more follow through here to the long side. Andrew says the exact value, 48.64. He says it used to catapult itself up. Yes, that's true. You could, if the market was extremely far away from the point of control, I know sometimes it would help or seem to pull prices back towards it. And like you said, a rejection of it would send it higher or lower as well. We're on a holding pattern for the most part. This hard edge bounce still has me a little bit leery about getting too crazy on the buy side, even though the Hawk and the Falcon both producing a couple pretty reliable signals. That first micro macro cross we had here, we had another first micro macro cross develop right here. 4-arrow consolidation right through here, coupled with a macro pullback signal. So a few opportunities for those looking to get a little bit more aggressive. The longer the market spends going sideways or even trending higher, the less influential this initial move is going to be. And we're talking now time-wise because, you know, these bars unfold, because they're range bars, they unfold as the market prints a certain range. However, you can see since the rally started, we're about a half an hour into the rally so far. Without any significant selling attempts. While we're watching and waiting here for the market to come around, a reminder, there will not be a trading room on Monday. I'm going to be out of town on Monday, so no trading room on Monday. Interesting question. Andrew asked, Eric, sometimes I watch market close on crude oil and am somewhat surprised that there are buyers still buying at the top. Why would they do that? Well, you have to remember different traders have different motivations. Um, the most obvious answer is that they've got a longer term outlook on the market. Some of them may be buying to liquidate their short positions. That's another reason. And there's another strategy that's involved where, well, here, let's pull up a crude oil chart. It'll make more sense. 1 second here while I build a crude chart. And for our purposes, probably an end of day chart will suffice. All right, so here's crude oil on a daily chart. And when traders see, big moves like this is obviously a strong rally. And what traders will do is they'll anticipate that the next day will be just as strong. So what they'll do, in order to avoid a gap on the open, or maybe to take advantage of a gap on the open, they will buy the close of that day. So you can see that all through here, it wasn't too bad a strategy until the very last day. If you had bought on the close, you would have opened with a rather substantial loss. So what traders are seeing, they're seeing the same kind of thing. They're seeing a market that's in a very strong rally, and they're buying the close, assuming that the rally is going to continue. Now, we don't know, what their financial positions may be. They may be very well funded. They may be fund traders actually trading hundreds of millions of dollars, in which case they're probably running a stop way down here. So a minor little intraday blip isn't going to affect anybody. But yeah, it's important to remember, different traders have different motivations. And even when the market is in a tear like this to the upside, and you think, oh, the bears are getting slaughtered. No, that's not the case. Buyers and sellers are still making money here. Again, it depends on your motivation. It depends on your strategy. Even intraday here, we've seen crude oil make a fairly substantial dip to the downside, right? So here's crude at open right about here. And if we went, short from here to there, there's still a $200 move per contract. And that's just on one of our signals. So yeah, traders, they've got different reasons. They see things differently. Maybe, somebody's pulling some sort of weekly fib level and they're seeing the market break level, or we've got an obvious breach of resistance right there. Right? Obvious swing high. Market broke that swing high also, broke this swing high also. So there's no question the market is bullish. Some people just want in. Let me in. My broker said it's a good time to buy. So they buy. Yeah, I've seen it too though, Andrew. I know exactly what you're talking about. Yeah, Steven says, I hope you're not taking a family trip to Florida, to Disney World in Florida. I got a great deal. There's a seat sale to Florida right now. Yeah, it's funny. I was thinking last night our winds were forecast at around 50, 55 miles an hour. And that's made a pretty good mess. I'm looking outside my office window and I got leaves all over the place. And I know I'm going to have a bunch of branches to pick up as well. But to be in an environment where the winds are 2 or 3 times that speed, can't imagine that. All right, so here comes that reaction. I would have sold that green bar sell. I'm a little bit late on that. We got a chance here at a second push. Oh, I don't want to go in for 2 contracts, so in case this market is pivoting. It's very, very slow, so I don't want to get overcommitted here. Oh baby, oh baby. All right, now this may be developing into a rule of 3. We've got 2 signals against the hard edge. So I'd be looking for the sellers to come back here at least one more time. Come on. What else do we have going on here? Soybeans still on a rally. Okay, the hawk producing a couple yellow bars. That's good. Like that. Also getting a green bar sell if you were inclined to try to short that. Oh, come on. More sideways trading. Okay, well, we've got this market kind of pinched. And you can see here on our support and resistance suite, we're pinched between the primary resistance and the primary support, pretty much skewered at the moment, right by the median line. All right, getting a little bit of a push to the downside now. Okay, a little follow through would be nice. Let's go. No, I'm going to leave them here and I'm going to sit on my hands. If I get stopped out, I'll get stopped out. I have a bad habit. We all have bad habits as traders. Some of us don't know we have bad habits. I know I have a bad habit of sometimes tweaking myself out of a perfectly good trade by getting overly aggressive with my stops. So I'm not going to do that. If anything, a deeper stop, of course, gives you more staying power. Oh man, they're sticky. Oh wow, they're sticky here today. So we're looking at a trend line, something like that. All right, another green bar sell with the signal producing right on the trend line. Come on. Don't make me break out the magic mouse. So this does have the potential to develop into a rule of three signal. We've got one, two signals against the hard edge. I certainly don't want to see a third one print. Wow, all this sideways trading, just been an incredible week. I don't think I've ever seen the markets quite this congested. Here's an end of day NASDAQ chart. The E-mini and the Dow, the Russell, they're all going to look the same. They're all doing the same thing. But just look at this congestion here. What a tiny, tiny little range. And if it looks to you like it's running out of momentum, you're not alone. Even the range before that was substantial, but sideways for a long period of time. I mean, like since early August until early September, before the market took a rather substantial spill. But the whole latter part of September and first week of October, just very, very sideways. Crazy. And what a tight little range. Like you can't even get above, can't even see 4,900. And the market's refusing. What's the low here? 48.36, and here 48.45. Yeah, I was thinking somewhere around 48.50. An insanely tight little 50 tick range. Crazy. Yeah, Andrew says the E-mini's doing zip. I don't think any of the stock indices are committing to anything right now. And in fact, we may button up the room here in a little bit. We could see something unfold this afternoon, just like yesterday afternoon. Well, around the lunch hours when the big move came. Yesterday afternoon, the rest of the session was dismal. But very often when the mornings are quiet like this, we'll see something go on in the afternoon. As far as directionality goes, I don't know. They're pretty balanced right now. You know, certainly if they get above this 48.70 mark, I think you can afford to be a little bit more bullish. And if we can see prices break this trend line here, I'm fairly confident we'll see them retreat at least here to the 48.53, 54 mark as they try to retest the lows. But yeah, just a crazy, crazy sideways kind of day. All right, you guys, again, a reminder, no trading room on Monday. I will see you again on Tuesday. I hope you have a wonderful weekend, and we'll talk to you then. Bye for now.